Well, various regulatory changes to cool the housing market are working, with property prices falling across the country. SBS Finance editor Ricardo Goncalves joins us now. And Ricardo, it comes as the Reserve Bank kept official interest rates on hold.
Anton, the RBA held the cash rate at a record low of 2%, but what has fallen are national house prices. According to CoreLogic RP data, they slipped 1.5% in November. The median price is nearly $600,000. So where to now? Well, if we take Sydney, for example, the auction clearance rate has slipped recently to around 60%. Now, watch what happens when we overlay a chart for house prices in the city. It tracks the auction clearance rate. So, does that mean prices will fall further?
Another month of negative data and the trend will be clear.
And we're entering the next phase, which is generally characterised by either falling to flat housing market conditions.
House prices rose last month in only 3 capital cities. Adelaide was the best performer. Prices in Melbourne fell the most in 18 months. In Sydney, the decline was the worst in nearly 5 years.
On a year-on-year basis, so it's really Perth and Darwin where we can clearly see those markets have entered the down phase.
ANZ's David Cannington says the housing market is facing 2 key headwinds, namely tighter investor lending rules and higher mortgage rates, which have seen auction clearance rates plummet.
To me, that's an indication that sales sentiment has weakened.
Taking the edge off prices.
Prices will fall by less than 5% before that starts to trigger some home buyer activity.
Affordability is still a problem, though. It typically takes 7 years to save a 20% deposit for an average Australian home, but housing is more affordable for Chinese investors.
In the past year alone, the depreciation of the Australian dollar relative to the Chinese yuan has made an apartment in the Melbourne market around 10% cheaper.
It comes as the Reserve Bank left official interest rates on hold, but noted that the outlook for inflation may afford scope for further easing of policy.
The RBA board met in Perth today instead of its usual spot here in Sydney, but either way, it may have preferred to have delayed its decision until after it saw some pretty important economic data. Economic growth and retail trade data is due out over the next few days. Then there's the highly anticipated US Federal Reserve meeting where American interest rates are tipped to rise. The RBA board typically takes a holiday in January, which means it won't meet again until February.
But the big driving factor, well, it'll be the US Federal Reserve, and do they pull the trigger and lift interest rates? What impact does that have on the currency? And more importantly, do we get a lull in activity after the holiday season?